What's going on, everybody? Can we get a mic test and a video quality test? This is probably going to render a little bit, and it's going to go higher quality.
Yeah, this is a new system we're trying out here, people. So give us some feedback here, audio, video. How we doing?
Yeah, how we doing, guys? Do you know where to ask questions? Do you know where to ask chat questions?
Right. That's another thing. So there's a chat feature here that you guys can now all write into. Question is, we're showing 0 viewers, but there's people chatting. So
No, I'm showing 26 viewers right now.
are you really? I'm showing. Okay. All right. So the mod can only see
Ah,
the gold. I see.
are you guys seeing the flip between us? Is it just Lucci, or is it both of us? All right, all good there. All right, cool. Sounds good. Well, we are going to be talking about holiday trading here. Um, Holidays kind of suck for trading usually. It's more like, holiday not trading. Lucci, what are your thoughts for general holiday trading that you've been in the
Yeah,
past?
generally speaking, I mean, again, like just go with the simple fact that if the larger players aren't in the market, or they're not messing around, or they're not planning to dump out positions, which they might be, but if the market is in a place where there's not a lot of volatility, um, and things are just kind of hanging out, then most funds, most institutions, most large traders, they're not going to really push around things. Um, so for the most part, you get this pretty kind of dead, you get this pretty lame sauce activity.
Sure. Now, we got this kind of general idea that funds going into the end of the year may
Right.
be doing some particular actions here.
Right.
So, if you're a fund manager, you're doing well. Most likely, you're going to be taking some gains at the end of the year if you've got spies this high. Happens
Right.
actually in the past. There's always ramp ups at the end of the year where people are just tossing out positions,
Yep.
and I think they're tossing it pretty quickly. Like you see
Yeah.
a lot more just dumping in general in the tape. Like Lucci, what would you say like when you see like large firms move rocking around a little bit into the year?
Yeah.
What do you see in here?
Well, honestly, I think this December is a little bit different. It's a little bit different in the sense that we had this monster washout at the beginning of the month,
Mm,
because we were already kind of low volume, kind of coasting. Everybody was just buried in call options and going for, market new all-time highs and all that kind of stuff. And then all of a sudden, we had this sort of, this real shakeout where a lot of big players moved around their holdings already. You know,
right.
so you had a situation where people are moving around some holdings, as far as moving into certain names, moving out of certain names. So I think that's why you had the real bigger push down on the XLE,
Hmm.
than maybe we should have had. Then maybe we should have had, because there was this giant rotation out of what was it? What were the other ones? Casinos. Like, you saw those
Casinos
casinos that just got
fried.
blasted. Most of the energy names. There was a lot of other names that just got blasted, and they haven't even come back yet.
Hmm.
So I think that rotation really, this month is a little bit different. So, I think the people moving out of positions and things like that before we hit Jan 1. I think a lot of that has already happened, to be honest.
Oh, just an earlier effect, huh? So, I did a report back in the day called the January effect, right? So it's kind of like I guess it's the idea that you've got people that are in positions that want to sell out of them before the end of the year, whether
Right.
for a loss or not. Essentially, they're pushing the stock down to
Right.
show that they took it at a loss,
Right.
and that would actually give them a tax benefit. And
Right.
then they would go back in January and buy the crap back up,
Right,
and
and
they would have
all of
front
those
push it from.
things, definitely happen. I mean, you and I, as fund managers, there are instances where us ourselves are incentivized to some extent to burn some holdings here to even help out investors. Just so that they can report some losses against their other income as well.
Sure.
So those things definitely do happen. The question is like, for us traders to make considerable money on it, it has to be it has to be a significant portion or rotation, out of one sector into another kind of thing, that we can pay attention to and kind of make money.
Sure, sure. And then regarding the actual holiday volumes, like I'm assuming that you're going to see just like a lot of whipsaw, chop, gap
Yep.
to chop, and all that nonsense. Where intraday, it's like almost impossible to make
Yep.
like a grip of money, right?
Yep. Take today. I mean, take today. Day before, a half a day, we have a gap up on GDP, and again, GDP produces a little bit of volume because of the news algorithms and everybody chasing after that. And then once the day opens up, you're talking about both directions, seeing light at the end of the tunnel, kind of thing. So that lays the foundation for all that chop. So in the morning you might look super bearish, and then all of a sudden, in the afternoon, now you're going back to highs of the day, and there's no real congruency as far as trading goes, and that's when you have to look at specific names,
Yeah.
have some news on it, or again the rotation thing, which is happening in the banks right now, so all these banks got floated higher today, regardless of the chop in the market, so there are some trades here, and again you still got to watch that money flow.
Yeah, totally.
But
And
overall volumes are horrible. They are horrible, and the lack of liquidity there means that, if you look at like 320 today on the SPOOs, you can see like a 3-handle just dump, in a couple of minutes, and
Yep.
there's nothing really behind any of that. It's just all of a sudden that liquidity disappears, and then boom, they shake everybody out, and that's it. So you get a lot of the games that are getting played. And then in the options market, it's tenfold. You feel it tenfold because again, you're stuck in a call. You're stuck in a call option. Your S&P goes 3 handles against you, and your option just disappears.
Yep, yep. I mean, the interesting thing is like when you have lower volume times, it's almost like the big players are actually showing their hands a little bit,
Yeah,
that they're actually around. These whales that everybody talks about, the axes of like the entire market, like market universe people kind of thing,
yeah,
they exist. Like you can
definitely.
see spoos literally look like some dude is like, I'm just going to sell 100,000. I'm
Yep.
going to buy 200,000 afterwards.
Absolutely, absolutely. And then even in the option space, like for those of the tape readers out there who've gotten good at watching bid and ask on options, and how it correlates to take into account, what are the indexes doing, what are the sectors doing, what are all these stocks doing, you can see some wild players, especially with market makers just widening spreads out unbelievably. And then you can literally see people just getting screwed in between. And I'll literally look at orders go off, and I'll be like, that guy just got fucking screwed. This guy's about to get his ass peeled back. So you can really watch how they play these games, on a sort of low liquidity type of environment. And it's the same way they play these games elsewhere. It's just you can't really spot them because there's still plenty of volume. There's still plenty of other players. Like, dude, I was in Citigroup I was in JP Morgan today with 650 contracts, right? And I was in I was in a 62 weekly option. And when I looked at the tape to see all the sells, the option went from like 45 cents to $1. And I looked at all the sells from 65 to $1, and honestly, bro, there was maybe another 50 contracts on top of mine. It was all me. All of it was me. Everything was me. And then I realized, like, at the top, I saw some other people get in. Like, I saw somebody throw out a 100-contract lot at $1. And I'm like, that guy's going to get fucking run over, man. That's exactly what happened.
Yeah, that's nuts. So you saw it in Citigroup is usually pretty thick.
It's super thick, man. Both of these names, you plugging around JPM, she's doing a couple thousand, man. Even the Bank of America is barely even traded today.
Yeah, this is dangerous times, guys, if you are a small guy and you don't know how to let your positions breathe. Like this is one of those situations where if you overmanage it and you keep hitting those keys, you're going to be affecting the market no matter how small you are because there's no real players. It's just a whole bunch of electronic market makers out there looking for your order flow, essentially. So
if you don't have something real behind you, which which usually, I mean, you usually always need. But if you don't have some real buyer or something in the equity, or somebody that you're following, which lucky for me happened in the banks, like you're up shit's creek here. Any spread that you jump, 95% of the time you're going to be like, I wish I didn't jump that spread.
Wow. Yeah. I mean, this is these are the woes of retail trading, especially guys. Like everybody that's looking for that last runner at the end of the year is kind of going to get run over most likely. And
Right. So I would say the best way to play it is understand the underlying sentiment. So let's say you're playing a Baidu, or let's say you're playing whatever, Facebook, or let's say you're just playing a bank or something like that. Prevailing sentiment, if it's bullish, as long as the market's not going anywhere, wait for them to wash out those options. Wait for them to crush those options, and then wait for the market makers to start showing that they're going to support that option. And then just try to bid in front of them, and try to get some limits filled. Try to get some limits filled, a couple cents in front of them, and then wait for that kind of upswing, that you're eventually going to get, and that's what you want to do. But if you play their game, and wait for that confirmation, so to speak, right after your stock is starting to go higher, and they spread it, and they spread that option out, and you're going to have to pick this offer off, it ain't going to happen for you.
Yeah, no, totally. Guys, we're pretty much going to keep it pretty short here. I mean, holiday trading, guys, the rule of the game is if you don't have a big pocket and you don't have deep pockets and you can't slap stocks around a little bit, and kind of force moves to happen, most likely you're going to be jumping across spreads here and there, and if you're trying to catch breakouts, it's going to be tough. And take your time with it. This is something that Lucci preaches across the board. Essentially, is if your playing board is all messy, this is a time to be a little bit alert. Like, oh, well, all the banks are moving, none of the high flyers are moving, and it's a little messy. But anyway, guys. I guess happy holidays, and Lucci, good luck in Boston. It's going to be cold out there.
Definitely.
And we will catch you. We're doing like what, next week? We'll catch everybody next week.
We might move things around, guys, because of the holidays and everything. Because Monday is though a full trading day, So we'll definitely be here. I'll definitely be trading. So we'll let you guys know if we're running the webinar then.
Cool. All right, guys. Well, thanks for coming by. This is the holiday trading session. And have a good one. Enjoy your time. Be safe, guys.